Happy Friday. I have seen some interesting stuff over the last week in regards to the Moody's downgrade of the US debt. Like mortgage rates are going to go up to 8, 9, 10% now that the US debt has been downgraded. And I say, no, you're wrong. What is Moody's downgraded debt anyway? Well, Moody's is a financial services institution. They specialize in grading assets, showing the risk, and basically they said, hey, the US is a riskier place than it was before. And everyone knew that already. Anyone who is a institutional investor or bond trader, they already know that. So it will not impact interest rates at all. It's kind of like a weatherman saying, I'm predicting it's going to rain when it's already raining. So I do not anticipate that to have any impact on mortgage interest rates, on 10-year treasuries. Now, we've seen interest rates get a little bit higher in the last week. The last month has been really good for the stock market, right? We've seen a lot of recovery in the stock market. Well, that money has kind of come out of the bond market. And so when money comes out of the bond market, goes into the stock market, that can, in fact, push interest rates higher. And that's what we're seeing on a small scale. Now, for interest rates to have a substantial drop, we still need a softer job market, like I've mentioned in previous videos. So mortgage rates right now have gone back up over 7%. That's at least the national average, 20% down with good credit. But while that's happening, purchase demand has stayed intact. In fact, we're at 14 weeks in a row where we've seen an increase in purchase demand year over year. It's not saying much because last year was really, really bad. And we have seen an increase in inventory year over year. So the market does feel softer for a lot of places, a lot of homes, but it's still a mixed bag. I think I've had 3 or 4 people lose out in a bidding war in the last week, while in other areas, I see prices going down. So it's very much a mixed bag, but the growth rate at prices, how fast prices are growing, is shrinking. And so that is a good thing overall for home buyers, because if you're trying to chase that price, it's really, really hard to do in a quick appreciating market. If you have any questions about financing a home, give us a call. Happy Friday.